Assalamu alaikum everyone and welcome back to my YouTube channel. The contents of my today's video are what is financial information and what are the sources of financial information. Today we will formally start financial accounting. As I have discussed in my previous video that financial accounting is about financial information which relates to the past period. So what is financial information? Any information that is measurable in terms of money and that can cause a change in financial position of an entity. Income and expenses, assets and liabilities, etc. all are examples of financial information. I will explain the definition of financial information with the help of an example. For example, income statement of ABC company states that its total revenue for the year 2022 was about 5 lakh and its expenses were 3 lakh 50,000. So the net profit comes out to be 1,50,000. This information clearly indicates that revenue, expenses and the net profit all are measured in terms of money, means monetary values are assigned to them. So these are financial informations. Now the next question is how these financial information can help an entity to improve its financial position. The answer to this question is pretty simple. The analysis of financial statements clearly indicates the performance of an entity and its profitability too. So from these informations, we can accordingly take measures to improve the profitability of an entity and its performance. So ultimately, it will improve the financial position of an entity. Moving to the next topic, sources of financial information. There are three sources of financial information: transactions, events, conditions. What is a transaction? Transaction occurs when two persons deal with each other. It can be a social transaction or an accounting transaction. Social transaction. In social transaction, individuals exchange non-monetary resources. For example, exchange of birthday gift is a social transaction. However, accounting transaction is a business dealing which is measurable in terms of money. For example, business purchased inventory from XYZ supplier on cash is an accounting transaction. Types of accounting transactions: cash transaction and credit transaction. Cash transaction is such a transaction in which payment or receipt is made immediately in form of cash or cash equivalent. Cash equivalent include checks, credit cards, standing orders, etc. And the other type, credit transaction. Credit transaction is such a transaction in which goods or services are received immediately but payment is made at a later date. For example, a company purchased inventory on credit of 3 months. Company will receive inventory immediately but will make payment after 3 months. This one is a credit transaction. Credit transactions will create either debtors, also known as account receivables, or creditors, also known as account payables. Debtor or account receivable is such a person who is obligated to repay the amount on purchase of goods or services, while creditor or accounts payable is such a person who is entitled to be repaid against sale of goods or services. For example, Company A sells goods to Company B. Company A is entitled to receive money from Company B, therefore Company A is known as creditor, while Company B is entitled to pay money to Company A against purchase of goods, therefore Company B is known as debtor. The other source of financial information is event. Event is a specific happening or occurrence that can have impact on financial statements. For example, loss of inventory by fire or flood. It can have impact on financial statement in a way that we have to reevaluate cost of inventory and record inventory at lower of cost or NRV. And secondly, if the loss of inventory is significant, the company even have to check the going concern assumption of the financial statements. And another source of financial information is condition. Condition refers to specific event that can affect how financial information is recorded or reported. For example, legal case against the company is a condition because the accounting treatment that either company should record provision or should disclose it in the notes in financial statement. It will depend upon the likelihood of losing the legal case. Subscribe to my channel as I will upload a video daily. And if you have any question, please feel free to ask in the comment section below.